Welcome to TradeTheMBA.com. This is John. This reports for the 27th. Nice little Memorial Day break we had there. Market is still functioning, what you might say, ready to pop, when additional funds and that come through, or any indication that the inflation fears are unfounded and just waiting for that clarification now that the holiday is over and that we'll begin to see it. But what we had here was our decline of the shakeout, as we talked about, but the return back up. Where we started to increase the histogram again. This is exactly what we were looking for a reset that would then propel you to new highs. Now we do see a small increase in short activity. We're all the way up to an 11. Not horrible, but as long as MDI Magenta remains over the 25, which it's right on the cusp of, then you would expect new highs to break out from that. And what we're seeing here is a direct decline of orange DOC, and we had the crossover short-term buyers. So that reset, enough to keep things modest, which we expected, nothing more than the 76%. We didn't even get to it. So all that was right in line, not unexpected at all, despite the gloom and doom and all the. It wasn't that long ago everyone was saying, "Oh, we're going to be seeing a 50% reduction in the market." Yada yada. It's amazing how quickly all those things are forgotten as we sit here and float towards the highs. And remember during the whole tariff talk and how it was all going to be a disaster. Well, we just saw the EU got their extension for negotiations, but they're still paying more. But at the end of the day, it's a losing proposition for the EU. They can't win. They're upside down on the situation because the imbalance is in their favor. And once things are evened out, they lose. So they're already suffering from modest recession, and it's never going to change. They're just going to be always near that zero, barely on the plus or barely on the minus side of growth. Well, and then you look at treasuries from a U.S. standpoint, it's like, well, it's pretty hard to resist when you're getting, pretty decent yield here. You can get as much as 5% almost. That's a big change to the rest of the world, and quite disproportionate when you think about how things are going. But it's just an indication that there's a weariness on wanting to buy U.S. debt, and you can call that the political environment, whatever. But it's a problem for any kind of sustained growth. Now you can make up for it here with the reduction in oil, but you're not seeing it significant enough. So I think that's muting any potential GDP bounce or any kind of accelerated growth. So it becomes a bit more modest. Just anywhere near recessionary? No, but I think it's going to point to areas where, depending on the policies in regions, you're going to have better growth in some than others, and that's just the reality of this situation as it is, because you're not seeing that decline in oil, and therefore that pressure just continues to keep things from propelling in a strong fashion. Now some people would argue that's better than not, simply because that you're not chasing too many goods and causing inflation that way. But cheaper oil always lowers the cost of everything. It just, that's how it works. It's pretty basic stuff, but not within the Keynesian model of spend, 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 and inflate, 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 which the Fed loves to do. So there's always that one. From a euro standpoint, they're even riding this high is merely a function of artificial impact, meaning it's not organic in that sense, because why would you want to be in a euro when you can do far better yield wise, not to mention the beneficial exchange rate? It's like, wow, that's a double win. From a gold standpoint, still holding on. And again, these are just those in place, but you can see the scary time for it, because it should be a move at least to the 50%, and that's unlikely to hold if it reaches that, simply because that MBI white writing clear above and dip below 25 on the magenta. So going to have to prove the inflation case. Otherwise, some people are going to get caught upside down quite a bit. Bitcoin and that continuing to move as, again, this whole crypto space feeling much more comfortable now and secure in where they are, but how much utility you can get out of them, that becomes the question. And this is the real holdback. Are you going to get to a situation where these have a regular commercial utility that can be used on a regular basis? And hasn't worked out throughout this time. We'll see. It's just going to take more time, literally. We could see that we had the MBI white lead, the break of the magenta below 25 here prior to, and then as we continued with that, the move to the zero with the MBI white leading. And then once it flipped over, that was the move at the 23%. And then you had magenta and white riding together. And when that happens, you're always going to get a short cover rally that continues to push up. And then when the reset came, MBI white was unable to stay above, which just meant that buyers were still outnumbering shorts in that case. Then once the magenta moved back to the upside, that was in the holiday break, you move back all the way to everything that was lost from there and begin the climb again. So all in all, on net, nothing was still bullish overall, positive from that standpoint. And when we look at it from an intraday standpoint from before the break, you can see the movement of just canceling out options back and forth. And in that holiday spirit, you only had the European session that was trading. And so here was what we see in the current European market. And that's all bullish from that standpoint. So I'm going to start off with the relatively modest improvement, but this was also just the Europeans playing back and forth during the holiday, so it really doesn't mean a whole lot. We'll see how things go when the cash open in the U.S. starts, and we'll get a real idea of how things are going to end for the month and the setup towards the beginning of next month, because by the 4th or whatever, you're going to have that new fund money coming in June and that, and it's going to be chasing something. And I don't think it's if we don't see inflationary numbers, no other place to go but then the market to buy. But that yield where it is, you're starting to get some pressure on the market simply because you can get a 100% secure yield without having to do anything, and that becomes very attractive. So we'll keep following it. As always, though, the readings are what they are. We just keep following what they tell us. So as always, anything relevant, I'll put it on our team chat. Have a good one. Trade well.